Welcome back, guys. It's Alon here, and this is AcornProductions. Thank you very much for tuning in with me this week. It's been not our best month, but we have done a little bit better. Over the past few days, we have done our rebalance, which is something we do every 2 months. Every 2 months, it appears to be every odd month with the way that it's been going. So on every odd month, so this is the end of January, the first month, so an odd month, we look at the portfolio, we rebalance the portfolio, and we also look to make any changes. So as you can see here, ever since our last rebalance, things have been going quite well. We've had 3 consecutively very good months. We have avoided really a bad month since August and September, but it looks like this was almost a 1.1 of our worst months to date. It wasn't that our holdings were particularly bad. Honestly, it was more that they were doing really good and it was a market correction. Coinbase was almost double that return before. A lot of these things had a really big run, and honestly, they just cooled down. The stock market cooled down. People might be a little bit less optimistic now. Inflation is high, a lot of things are going on, but at the end of the day, I am still really confident that everything we're invested in at the moment is a money-making machine. To top that off, Tesla has also declined, but I have honestly just rebalanced the portfolio. So you can see here we've invested more than its current weighting in our portfolio. I wanted to take a bit of time today, guys, to let you know, just a quick recap, what the portfolio is at the moment. So if you guys remember, let's start at the top. We've got 4 sections of the portfolio. The first one is essentially the reserves. So if we go down here, we have silver and gold. IAU is gold, SLV is silver. These are just essentially, instead of holding silver or gold directly, where you need to pay fees on particular in etoro and other websites as well, these are indexes that let you hold it for a little bit cheaper, and they essentially track the price in a similar way. And outside of that, we've decided to go a little bit more dividend oriented, so cash flow oriented with our reserves. So we have things like Vici. Vici holds a lot of Las Vegas properties. They essentially pay dividends, so you'll notice every now and again a dividend coming into your account. On top of that, we also have Arbor Reality Trust. It's another REIT, essentially like Vici, which is essentially a company that holds a lot of property and pays out the income. So remember, the income is paid, and this is appreciation, so it's completely separate. These might not appreciate as much as, let's say, a Tesla or a Berkshire Hathaway, because these companies don't pay a dividend. They don't pay essentially money to their owners just for the sake of paying it. They'd rather reinvest it. So they're different strategies. But with the reserves, I really want cash to come in, because I think cash is a great way to support the rest of the portfolio when it comes time to rebalance. And also, when something's paying you a pretty good yield that's consistent, it's also really hard for that to drop too much in value. Now, the final holding in our reserves is TLT. This is long-term government bonds, so like 20-year government bonds plus. So this is also paying a few percent at the moment, and I do see that as a good hedge. So if interest rates do eventually come back down, this will become more promising. So it's also a hedge for interest rates coming back down. If interest rates go up, that will honestly do worse. Now, the next part of our portfolio is the chest, which is the biggest part of our portfolio. So you'll actually be able to see it with our biggest holdings. So Tesla is a big proponent of our chest. It's 40% of our chest, or 16% of our portfolio. So during the rebalance, it was honestly one of the biggest beneficiaries, because it went down in the past week or 2. It's had some bad news, so we've pumped another few hundred into it, we've rebalanced it, and essentially we've put it back to 16%. Then we've got Berkshire Hathaway. This is a great investment. That'll be around 12% of our portfolio. Then we've got Microsoft. Bitcoin is part of a different one. Then we've got Microsoft, which is going to be 8% of our portfolio. And then we've also got Apple, which is over here, a little proponent. Got to have a bit of Apple. Microsoft and Apple, some of the biggest companies in the world, but they are producing a lot of stuff. Microsoft in particular has a lot of diversified growing products, and Apple is likewise. They're not going anywhere. They make beautiful products. I personally have an Apple phone. It's not the latest, but it actually does quite well for something I use every day. It's a very reliable product. Then we have our high risk options, guys. So let's go quickly over the crypto one. We have 20% of the portfolio in crypto. So we got Bitcoin. Bitcoin is the biggest crypto, 10% in Bitcoin. Then we have 5% in ETH. Where's that? Ethereum over here. And then we pick a few smaller, riskier ones. I really like Algo. I think I have talked about these in the past, but I've used Algo personally. I recommend you to use it as well if you're into crypto. Really smooth, really good to use. If it survives the long run, because it is a smaller crypto, not as decentralized as Bitcoin and Ethereum, so it is more reliant on the team. But if it survives, I see very good things for it. And then Matic and DOT, we won't go into too much detail. They're just small holdings there to round off the portfolio for crypto. And that's our right horn. So remember, we've got a left and a right horn, and these are essentially what go for super economic returns in our portfolio. The chest is the foundation, those four main companies we just talked about. Then we've got a crypto arm and a company arm, and these are essentially the risky plays. They might not always succeed, but they're really there that when they do work, they're going to pay off big. So we don't want too many holdings there, because every time you diversify, you might be picking a least popular option than you already had. So we want a few really good, essentially bets that are going to work. Now with the left horn, we've got MicroStrategies at 6%. I really like MicroStrategies. It is a very good company on its own, but it also heavily invests in Bitcoin as a company asset. Besides that, we have Coinbase. Coinbase is a leading exchange in America. It's fighting it out with the American government. Essentially, everyone hates crypto, all the traditional companies, governments, all of that. They don't really like crypto for a lot of reasons that we won't go into in this essentially video, but Coinbase is positioned to benefit if it can weather the storm. It's one of the only exchanges in America, and people really trust the American regulation and everything that comes with it. So it is positioned to do really well. It's been one of our best performers, and it's really volatile at the moment, but volatile in a positive way. And then I added some historically really good companies. We've got Meta, Facebook of course, Amazon, Nvidia, and last one, Google, is here somewhere. There we go. These are doing decently, and we essentially I backtested all of these companies, and they've just done ridiculously well over the past decade, and they really look like they're positioned to continue to do so, these big tech companies, unless something changes. And in the meantime, I see them as great holds, great fillers in the left horn, or one of the horns, until we find something we really like, some opportunity that might come up. We can temporarily replace them, but at the moment I feel very safe sleeping at night with them in the left horn. I wanted to quickly recap the whole portfolio and essentially how it works. That's the generic strategy of our portfolio. All these different parts work together to essentially give us a balanced portfolio that's not really that passive, that is quite heavily focused on growth, less on dividends than perhaps some other portfolios will be doing. Really only our reserves is focused on dividends. Other parts of our portfolio do pay dividends, but it's not really dividend heavy. The main focus is growth, and we are really looking to continue this trend of around 30% a year. I would be very happy with that. I think that is actually quite a lofty goal, and if I can continuously perform at 30% a year, I will be very proud of myself. I want to thank you all for joining me. If you do watch my videos, at the moment I don't have many viewers, many supporters, so whether it's now or in the future, I really appreciate you. And I hope that we can all come together on this journey for financial independence and do it together, learn together, grow off each other. And I look forward to catching you all in the next video. All the best.